Welcome traders to another Signal trading update with me, Patrick Munnelly. Want to update the S&P 500 view using the emini futures contract and look at a potential trading plan for the session ahead. Before we jump into the technicals, let's see what we've got on the macro side of things. No real data of note today. We do get Fed speakers Bostic and Barr speaking later today. But from the macro side of things, we have the Democratic National Convention on Thursday, where Harris is going to make her acceptance speech. And we then move, before that on Wednesday, tomorrow, we get Fed minutes, likely a little bit stale given the fact we'll have heard from quite a few speakers, and market attention is really going to drift towards the main event of the week, which is going to be Powell's speech at Jackson Hole on Friday. So, looking at the technical side of things, just before I jump into the S&P, noteworthy that we have the VIX expiration tomorrow, and we've seen the VIX decay pretty rapidly down to those pre-sell-off levels, and certainly I'm going to be watching the 13 area. It's a level in which I'm going to look to re-engage on the long side with the VIX. You can review the video that I posted earlier on the Tickmill blog, which gives the details of that trade. And if that's going to set up, then I'm anticipating some volatility in terms of the S&P as well. However, from a purely technical perspective, the daily chart here, we've now taken out 78.6% retracement of that sell-off that we saw at the beginning of August. So technically now, my upside objective, once we clear all-time highs through that 57.20, is going to be 58.83. Now, I don't sense we're going there in a straight line, and I'm looking for some corrective action to develop. Certainly, the initial pullback we saw from the recovery bounce, so that reaction low, 174-point swing there. So it's worth bearing in mind that we could still see a correction here. I'm not convinced at this stage that we've got a V-shaped bottom in place. Certainly, as we head into September, the second half of September, the last 2 weeks of September are traditionally the worst 2 weeks for equity markets in the year from a seasonal perspective. And obviously, we've got election uncertainty building. And so I don't think it's going to be all plain sailing. We do, however, have video earnings next week, and they may provide a boost to take us through all-time highs. But we're taking a session at a time, but those are just things that are on my radar. Let's move to the plan. I was looking up into this 56.30 area. We've tested here. I've put on a short as per my plan, really, and we'll see if we get that equidistant pullback, which will have us into the 54.40s to 54.30s. It's possible. I would say at this stage less probable given the current setup that I see. So moving to the daily bull bear zone, I'm going to use this 56.15 to 56.05 initially as support. So any pullbacks into that area, bullish reversal patterns there. And we are going to target today a test initially into the weekly R1, where we could see a pullback back into the value area high to act as support. Ultimately, I'm looking for 56.80s on the upside, and from there, certainly if that trades into the back end of today, at the last part of the session, I'll be watching for opportunities to fade that for a tradable pullback once we get through the VIX expiration tomorrow. Alternative scenarios, that's my primary expectation. The alternative scenarios, we take out the bull bear zone and trade back into this pivotal 55.70 area support, and then again I'll be watching for bullish reversal patterns there with the same upside playbook in mind. So key levels for me today are the 56.15, 56.05, below there 55.75, 55.65. Above, we are watching 56.80 to 56.90, and those are the first areas where I'm going to be looking to engage the market. We have expected range resistance at 57.21 to 31, which would be back into all-time highs, and below us you can look for 55.40 to 55.30 to act as a range extension support if tested. And I think that pretty much wraps things up for now. As always, traders, plan the trade the plan, and most importantly, manage your risk. Until next time, thanks very much.